Well, that was quite the introduction, everyone, wasn't it? Now I just had to figure out how to turn off that music. But anyway, welcome to the financial show. Steve Merrill is expected to join me shortly. And we'll look forward to looking at the markets here in the aftermath of the non-farm payroll and also the fact that they got the debt ceiling increased and approved through Congress, which is a big relief. I'm going to get right to a stock that we all familiar with and probably have many of their products and services is Apple Computer. So on this chart here, we are looking at a chart of Apple Computer. You can see the wedge formations that occurred over the last several months. You can also see the bottom that occurred when the Fed was in the midst of the beginning of its frantic tightening, and it's bullish divergence. This is the definition of bullish divergence. We see this kind of stuff in the sports betting markets too, and that's one of the main reasons that Steve and I thought this would be a good show to do, because there are so many similarities and parallels between the financial markets and Wall Street versus how Las Vegas sets the spread. It's exactly the same thing. The market makers want to have equal action on both sides. They don't want to get caught leaning one direction or another. And the same thing with with Las Vegas sports books. So this is a chart where Apple set an all-time high today at $181.78 per share. It is now well over $3 trillion in market cap, which is amazing. But you know what else is interesting is a company called Microsoft, which I'm sure all of you are familiar with. And this too is making 52-week high, all-time highs, and it's well over $2 trillion and actually closing the gap on Apple. And just hypothetically, it would be interesting if a year or two down the road, 3 years, Microsoft becomes the largest market capitalization company in the world. It's obviously these two companies have separated themselves from the rest of the financial world, and they're the two powerhouses across the board in any industry you want to look at. Let's take a look at Bitcoin here. You can see on this chart, not quite as enthusiastic as the chart we just saw with Apple. And you'll see that the lows that were made back at 14,925, right there in the center of the chart, we have rallied sharply, but we are underperforming the S&P 500. And I don't like this chart formation at all. If the market corrects itself in any way, it's going to take a pretty big hit, probably down into the low 20s. But Steve Merrill is here now, and hey, Steve.
John, great to see you.
Great to see you too. Sorry I started without you.
No.
It's been a while, but I'm glad that we're resuming these shows.
Yeah, it worked out well. The MLB show at WagerTalk TV ran a little long, so just jumped off that, and then got some NBA talk coming up. So yeah, always looking forward to talking the markets. It's been too long, man. We haven't chatted in a while.
Yeah, it's all good. And I know, speaking for myself too, on those Major League Baseball shows, there's a lot of people that have a lot of good information to hand out, and sometimes it does run over because we have that gift to gab.
Yeah, definitely. And we're in the heart of the baseball season. You know, it's funny, this past week, 54 plus games is exactly 1/3 of the season. So 1/3 down, 2/3 to go still.
Well, it is our financial show, but what do you think of I did a piece on the Phillies the other day, and what's wrong with the team and the offense and things to do to correct it. Trey Turner's launch angle has gone up 4 degrees from his career average. I think he's being suckered into hit home runs in the right field, which is a short porch at Citizens Bank Park. But what are your thoughts so far in the Major League Baseball season?
So funny you say launch angle, because I've been working with my 11-year-old son. We have a travel team, and he has a nice swing, but he has a little uppercut there. And we keep telling these kids, like, you don't have to try to lift the ball. The bat will do that. And yeah, launch angle, in my opinion, John, has really ruined the sport. I still like baseball, but they've outlawed the shift this year, and it's ridiculous that they had to even do that, because guys should have just been slapping the ball down the third baseline when they shifted on it, but they won't do it. They would rather hit into the shift and fly out because their agents have told them they'll make an extra 20 or 30 million by hitting 4 or 5 or 10 more home runs and having 30 extra outs. So, yeah, launch angle is definitely something I think that's hurt the game in the short term, but I think things will come back around. I think there'll be a role for an Ichiro type player that can slap some singles. I was reading something the other day, popped up. I follow one of these old baseball groups on Facebook, and they had a thing on Rod Carew the other day about his 1977 season when he won the MVP finally with the Twins. He flirted with 400, ended up hitting like 380. I didn't realize he'd hit that well. I remember George Brett hitting like 390 like right after that. But that's a lost art. You know, Tony Gwynn, Rod Carew, Wade Boggs, Mattingly. I think there'll
Ken
be a role
Griffey.
for that at some point.
Yeah, as you know, I coached more baseball for
Right.
more years at the youth level between the ages of 10 and 18 than I would probably care to admit. And one of the greatest displays of hitting I ever saw in a warm up was at Citizens Bank Park, and it was A-Rod. 11 consecutive pitches, all of them home runs, well out of the playing field, alternating between right center and left center.
Wow.
11 in a row. So he was a student of Charlie Lau. And you know Charlie Lau probably.
Sure.
His father researched all the great hitters, starting with Ted Williams and even Babe Ruth, whose swing is really not something you want your kid to model, but one of the best home run hitters ever. And the whole idea was to have the strategy of hitting the ball to the opposite field with every single at bat. And that way, if you get a middle in fastball, you're going to be all over it as a right-handed batter. Now I'm talking. And if you throw it, a pitch that's low and away and you're fooled, your launch angle is pretty much at like 5 degrees. And you have the bat in the strike zone far longer, and you're going to get more hits. And as a 11-year-old son of yours, he's going to be a lot happier running the bases than popping up to the shortstop and sitting down again. But
It's funny
that's
because what they do, they practice twice a week as travel team. They do something called the right side game at the end of every practice. They've done it for over a year now, where hits only count to the right side of second base.
that's a
And
great drill.
yeah, so that's so funny. I'm going to reinforce that with them then because that's exactly why they do this. It's the practice hitting to the opposite field and sit back and wait on the ball. So now you've given that even further strength. They call it the right side drill. They enjoy it. But it just shows how functional that is. And I just tell them basically try to hit a line drive every time. That's my theory as well to try to keep them honest.
Yeah, and that's what a home run is a line drive that leaves the playing field. That's all it is.
Well, the thing too, John, these fields are on now, like some are 200, some are 300, right? There's a huge discrepancy. And like it'll be a home run now, even at the 11-year-old level in some fields. We played on a softball field last week. It was like 170. There were like 5 home runs in that game. We only had one of them, unfortunately. But on the bigger field, I was like, those are outs. So that's the thing
Right.
with home runs also. You're flirting with an out every time. It's either a fly ball out or a strikeout because you overswing or a home run. It's the risk reward like we talk about in trading, right? You're trying to hit the home run, and that's kind of like the option strategies or the trend following that I use. We'll take small losses for a home run, and that's kind of how baseball is now. They'll take the strikeouts for the occasional home run. But as with the markets, there's ways to hit singles on a daily basis as well. So it's different strategies. And that's why I love talking sports, baseball, and finance with you because they all kind of go hand in hand.
Well, it's been a while. I apologize to the listeners for digressing into sports, but that's the purpose of the show. I mean, that's why I said in the beginning of the introduction is there's so many parallels between the
Sure.
financial markets and sports betting, and we do the sentiment readings, bullish and bearish on a given team and why. I'm going to switch over here, Steve, to the S&P 500,
Sure.
and let's put this guy back on here. And here, where my arrow is that's where the Federal Reserve was really tightening the screws and probably almost a panic type of rate.
What's that date?
That is what is that date?
Is that a weekly? I mean, how long a turn of a chart is that?
Oh,
That looks
it's a daily.
daily. Okay, so we're
So
talking
every
about a few
bar in
months
the
ago.
candlesticks here is a day.
Got you.
But look what has happened here, and this is a textbook example that should be in a as a case study for graduate students who want to pursue this kind of stuff. Every time the Fed has tightened after the highlighted bar there in the middle of the screen, the market never came close to making a fresh low.
Right.
And historically, this is what you want to see because When the Fed tightens, oh, that's just horrible news, and the market usually tanks pretty hard. There's plenty of tightening cycles you can look up historically where new lows were made and new lows were made every single tightening. 1980, for example, 81, when Paul Volcker was really bold and did the right thing and jacked interest rates up to 22%. For those that are younger than us, Steve, they probably don't realize that it can go that high, but it
Sure.
does. And uh, and that was something where the market did make lows, but then it stopped. And then that set up the beginning of the biggest bull market the world has ever seen, and starting in 82, as you know. But you can see here each successive low. We go here. This is a Fed tightening day here, I'm sure. The big red candle. Little follow through, digestion, not even close to the previous low. Another tightening in here, and then nowhere close to making a low even from this low. And now look at us. Coming up, those red bars going across, for those that want to know, those are Fibonacci retracements. So that's from the all time high to the low made during this Fed tightening period. So we now have crashed through the 50% barrier. And generally speaking, once you crash through the 50% retracement, you're going to retrace the whole move. So I'm pretty bullish right now, Steve, regardless of what the media types might be saying that this is a bear trap or whatever. I think we're going to be at new highs within 6 to 12 months, possibly sooner. This rally today is huge, all the way up to 42.93 now in the S&P 500. You agree or disagree with me? And you're free to disagree.
Well, yeah, definitely, as I know. But yeah, I mean, look, I saw something the other day. I thought of you actually, John, before we chatted. The S&P has become so top heavy, and we've talked about that for years now. And I believe 500 companies, the top 10 right now, make up 35% of the value of the S&P, just 10. And to put that in perspective, I believe back at the dot-com bubble boom, top 23 years ago, it was 25%, which is still a ridiculous number. But now it's 35%. Of course, we're talking about who? Amazon, Apple, the big names. So that's where I think there's some money to be made if you could figure out how to play that, because the overall 10-year price earnings Cape Shiller ratio, whatever you want to look at, the market is still overpriced. It's not as bad as it was maybe a year ago. Emerging markets are still a lot cheaper. So I want a reason to be bearish, to be short or whatever, but I also know there's an upside bias to the S&P, and like you said, they keep finding reasons to push this higher. And looking at all those lines you have drawn there, it is an uptrend right now. And I mean, that's a very clean upward trend, by the way, since that low at 124 or so. So I'm not fighting the trend, but I do think at some point it'll roll over. But I think it definitely looks like it's going to clear that high that's on the left of the screen there, without a doubt. And that means you probably don't want to be short anytime in the near future. And the thing is, when it rolls over, as you know, John, it's going to be a sharp spike 2 or 3 days straight, and it might even be too fast to get in, especially if you're trading on a weekly basis.
Yeah, I think here that's a great point. This is Apple Computer, by the way. You mentioned the top heaviness. You basically have Apple and Microsoft now. If you really want to narrow it down even further, they're by leaps and bounds the biggest market caps on the face of the earth right now. Apple now over 3 trillion, and being the only one that's ever attained 3 trillion. But I think Microsoft, with their broad products and services, there's no reason to think that down the road they're not going to be a 3 trillion company too. But I think what we have to pay attention to is sentiment. And when the bullish sentiment gets extreme, like we see in the betting markets, where 75% or more people are saying that the Denver Nuggets are going to win game 2 by 50 points, being a little sarcastic there, you want to start leaning towards Miami. Same thing here is that we don't have it now, as Steve said, but I think one of the candlestick patterns that's always been reliable to me is the engulfing candle, and that's where you make a new high in an uptrend and finish below the previous day's close. It basically is a bigger candle, but it finishes negatively, and that's your first warning sign that the uptrend may be over. So until we see that, I don't see any reason really to get out of the way of this momentum.
Well, look over there on the left side of the chart. You'll see one of those down arrows. You see a big red one, and then that's exactly what you're talking about there. with Apple there, and it
Yep,
dropped right after that. And
right
it
there.
makes, yeah, exactly. It makes perfect sense because you're basically flushing out. There's an equilibrium. There's a zero sum game in the markets. There's a buyer for every seller, and vice versa. So when that equilibrium breaks hard in one way, there's just no more buyers left. So when it opens at a high and closes at a low, that means there's no buyers left that day, and they're not going to all of a sudden appear the next day. Plus, then you get the momentum, the trend guys like me who jump on board, and becomes a self-fulfilling prophecy. And we basically saw it run from there all the way down to the low. But we've seen some nice rises since, and it's been a very clean rise, like you said. The volatility isn't
Yep.
nearly as extreme as you would expect. So I still think there's a lot of things wrong with the economy. I think there's a lot of idiots in charge on both sides of the aisle. That's not a political statement. That's a government statement. And I mean, what about the debt ceiling? Do you think there's any? It's almost like the markets don't even care about that, right? It's like they're not even reacting to that, which I
It,
agree.
it,
I think it's a whole bunch of nothing.
it is. It really is. And, I would have said 15, 20 years ago,
Sure.
major news,
Right.
and the market would not be doing what it's doing. But again, like to your point, the way the market has absorbed negative news with Fed tightening, strong numbers, and I think you'll agree with me. Like you mentioned, both sides of the aisle. This notion that inflation is a problem is the biggest piece of misinformation I can remember possibly in my life. Because just take a look at, if you look around your room or your office or wherever you are, a lot of the stuff you're looking at is made out of crude oil. It originates from crude oil. Your paints, the color of your table,
Right.
uh, the
Plastics.
the paint that's on the composites of my Peloton that I'm looking at.
Right.
It's all that base. Now here's crude oil. The high was 123 way over here, almost 124 a barrel, and now we're 71.
Right.
Heating oil, the same thing, that plummeted. Unleaded gas technically should be lower than what I'm seeing in the Northeast, but only because the retailers are keeping the price high, and they need to make money too. They take it on the chin when prices go up big time real quick. They actually end up losing money.
Right.
But eventually, that unleaded gas throughout the summer here, I think is actually not going to go up as it seasonally does. I think it'll probably stay the same or possibly go down. So where's the inflation? It's bizarre.
Well, John, I'll say this though, like sometimes I take a step back and just go by the smell test, right? And I'll use eggs as an example. As I keep saying, something's not right with the economy because, like, rental properties rents have doubled in some spots. There's a scarcity there. Eggs, for example, like I like Aldi. We have an Aldi here in town. It's like my favorite store now. Great, like produce, fresh produce, very good prices. They have the European standard, like on cereals. So they don't have all the stuff added like the American cereals. And eggs are always been really cheap there, and they're like 80 cents a dozen, which is cheap. Most spots they were a dollar or two even before COVID. But they went from 80 cents a dozen this past year to like $1 to $2. A couple months ago, they were $4.50 for 12 eggs. And
Wow.
then I was in there the other week. It's back down to $2.50, 260. And I was like, oh, maybe I'll start getting some more eggs again. The very next day I went in to get something else. They were at like $1.80. They went down that much in one day, and they've been like $1.60 for the last month. I literally check egg prices just as a barometer every time I'm in there out of curiosity. When in recent history, including the early 80s, has any somewhat important food item gone up 400% and then down 200% within a couple weeks? I know there was some kind of chicken issue. What with that said, transportation issues, but there again, something just doesn't seem right to me, and that's why I'm looking for a reason to be short long term the S&P. But if it ain't broke, don't fix it. But yeah, that's where the inflation thing is tricky for me because things have skyrocketed like I've never seen in my lifetime, like on a short term basis.
Yeah, I agree. I was going to bring up the live cattle futures to see how they look, but
John, someone told
even
me they used to be able to trade eggs. I've never seen it in my 20, 30 years following it. Do you remember that back when you started? I don't remember there ever being an eggs futures market, but
I think that was right in the beginning
maybe that was a long,
of
long
the
time ago.
Chicago Merc, I think, or maybe it was the Kansas City. Kansas City Board
Interesting.
of Trade was probably the one that had eggs. Come to
Wow.
think of it, but I never traded them. I didn't never saw the contract.
Yeah, I never did either. Just curious.
I think there was potatoes too at one time.
Really?
Yeah, it was pretty nuts. Well, we have orange juice.
Yeah, and that market and sugar, by the way, I hadn't seen you the last month or two, but being long sugar has been was pretty good to me the last couple months as far as trend. Orange juice always gets a little choppy. You know, it skyrocketed up and then dropped really fast a few weeks ago, but there again, sugar was off the charts also the last couple months, which once again, you know, you could say the inflation settled or whatever, but then you see these moves like orange juice and sugar spiking to like 5 or 10 year highs or whatever it was. Tells me once again something just ain't quite right.
Yeah, I agree. Now, one thing I actually thought of this morning that to me makes sense, and you can dissect it for me. Tell me it's not. But commercial real estate at some point here is going to, I hate to use the word crash,
Yeah,
but something has to happen. Every mall I go into here in the Northeast, some of the big ones,
totally empty. Yep.
yeah, or even the most popular ones, like the ones like out in Minneapolis have vacancies. So I started thinking that commercial real estate really needs an adjustment. There's a couple of the most popular, most prestigious office buildings in Manhattan, 50% occupancy. That's not a good number. And I started thinking that okay, well, if the shoe comes off the other foot, these regional banks that have mortgages with these buildings and these renters are gonna take it on the chin. At the same time, though, real retail, homes, our homes, that I don't think that's going to be affected at all. And I think the other macro trend that's in place is that people are not going to go back to work like we used to do before the pandemic. There's not going to be a lifestyle of 5 days a week in the office, getting up at 6 and being there by 7:30 and, coming home and having dinner and then repeating it. And that's going to exacerbate the commercial real estate problem, but it's also going to add a big boost uh, the demand for mortgages, demand for houses. We already have a short supply of houses because people don't want to sell because they have no place to go because prices are so high now that, yeah, it's great to be able to sell your house at a price you didn't think of a year ago. But then what are you going to do? So I was thinking that if this would, in an extreme case, commercial real estate goes down very, very hard, and home values go up by as much as 15 to 20%, like over the next 2 years, or maybe even sooner.
Yeah, well, I mean, I think the real estate thing has been something else. I've been waiting for that other shoe to fall because when they jacked the interest rates, obviously it cooled the market off. But I was talking to a realtor the other day here in Virginia that said she was representing a buyer the other weekend. They went to a house that had 20 offers above ask in April.
Wow.
This was like in late May.
Oh,
So
man.
my theory was that everything was going to die in September last year. I think I might have been a little premature, as you and I often are. It always goes longer than we think. Like the S&P
Yeah.
dropping, it always
Yep.
holds on longer than you think. And I think people still have to move and buy this spring. This is going to be the last hurrah. So if that's the case, the S&P and everything might be okay. Even though you always hear, sell in May or whatever and go away. It might be the opposite this year where things, and October's always had some really bad months. Look back at Great Depression back in 1987. It's like October's always that tricky month. So that's going to be my prediction is that if we're going to see something happen by then. And 100% with you on the commercial real estate. I've said it for years now. COVID was the final death blow, in my opinion, because it just made online even stronger. And now, like you said, you don't have to go to an office anymore. But what I've realized, at least here in my neck of the woods, is like you walk around, these places have been vacant for months, if not years. The landlords, I've been told, aren't lowering rent. And someone pointed out to me, a lot of them have vacancy insurance. I'm not sure exactly how that works, but I think they've been holding on because of that. My guess, though, and I've never dug into this, you should do some research on it for me, John, is that I can't imagine that's in perpetuity that you can just have these vacancies for year after year. It's probably like a 5-year policy or something. So if that's the case, they've gotten through COVID for a few years now. I think some of that might start to roll over. We're going to see some major blows to commercial side, banks. We saw that already with interest rates jumping, some of these online banks. So I think there's a lot of bad stuff. History doesn't always repeat itself, but it rhymes. So wouldn't it be ironic that the next big crash like in '08 is somewhat real estate related?
Yeah. No question. But one, we look at sports too, and one company that I think is underperforming is Endeavor. which is UFC. And that's not Endeavor there, but I forget what the ticker symbol is for Endeavor. Do you know off the top of your head?
Uh, it's like that UFA, or UMA, or whatever. Yeah, pull this one up because I'm going to jump for the show here in a minute. So this is a great one to end with. I forgot we talk UFC sometimes.
Yeah. Well, if you have anything, give your take on it because it's $22 a share. I'm going to find the ticker symbol here real fast. Um, I think if any of the stocks to buy now, this might be one to play because the UFC just gets more and more popular every Saturday night. The pay-per-view numbers are off the charts. They've had to spend a lot of money for advertising and monetization, but now that that's kind of behind them, I think the profitability is wide open. And of course, I could be wrong. These are only our opinions, but just curious to know what you think, Steve.
Yeah, and I've always liked UFC and NASCAR, especially after COVID. They were the first two sports to come back when nobody else would. So I always root for them. And I think they do have a real loyal fan base. And they also made their business, at least from a fundamental side, much more efficient, and they're basically on every single week now, like you said. They didn't used to do that. And they do it now because they were the only sport in town there back in March and April of 2020. So I think there's still some upside. But as with most stocks, to be honest, I think if you get the sentiment of the market right, you're going to probably get 90% of these stocks. They're going to all kind of be correlated. So for me, it's still like long or short the S&P 500. Although, as we've talked about, that's become very top-heavy with 10 companies make up a third of it. So there's never anything wrong with picking and choosing some non-S&P 500 stocks to try to find a little bit of an alpha edge.
Yeah, diversification of risk, right?
Right.
We don't bet with just one analytical system. But this is Endeavor now, real quick, and I just like how this has been trading. The low is 18, the high is 26. Even if you're wrong, you're not going to get your face ripped off on this one, I don't think. And my upside on the models have 32 on a 6 to 12 month horizon, so that is the reason for buying it.
Yeah, and it's very much near that bottom of that channel, a little bit of a slight trend line up, which you like to see, yet it's at the bottom of it. It's almost like it's tapping that trend line up. If you drew a trend line at all those bottoms, it's pretty much bouncing off of it right now. So I think the risk reward on it is fantastic.
Yeah, so you got another show to go to. What's this one going to be all about?
Yeah, I'm actually pre-taping right now with Teddy Covers for his Cover It, which is on SiriusXM on Saturday mornings and replayed on Sunday. So I'm doing that one here, and then NBA Tip-Off Show on WagerTalk right after that, and then this weekend a Fade the Public. We'll talk about public sentiment for Game 2 of the NBA Finals, so check out WagerTalk TV on YouTube.
Yeah, if you're not already, you got to follow Steve Merrill and his YouTube channel because especially when football season comes up, he does a show that I look forward to, and it is Fade the Public, and it's very good. And his picks this past year, I don't remember what it was, but you were up a ton. So if you're not following him, make sure you do.
Yeah, and I posted on Twitter too, at Steve Merrill, 2 R's, 1 L, Merril. Unlike Merrill Lynch, 2 R's, 1 L, at Steve Merrill on Twitter. Thanks, John. Enjoyed it, man.
You got it, Steve. Have a great show. We'll have a great weekend. We'll see you next week.
Sounds good. Talk to you soon.
You got it. See you.